Hello and welcome back to Insights Out, Season 2, Into the Web3 Economy. I'm your host, Dr. Jen.
Let's start with something you probably do every day.
Right, you tap your phone to buy coffee with Apple Pay, or you send a friend $20 on Venmo. It feels instant, digital, and simple. But here's a thought. That digital dollar in your app isn't actually digital money. It's just a message telling a bank to move its money. What if it was real, official digital cash? A digital dollar issued directly to you from the US Federal Reserve.
It sounds like a plot from a sci-fi movie.
But it's a very real future that governments around the world are racing to build.
Wow.
And it puts all of us at a crossroads, forcing us to ask a profound question. In the digital age, who should create our money? Will it be central banks, or will it be private companies? This is the global showdown between Central Bank Digital Currencies, or CBDCs, and stablecoins.
Okay.
Today, we're going to unpack both. First, let's look at the government's vision, the CBDC. In simple terms, a central bank digital currency is a digital version of a country's physical cash.
Right.
But here's the crucial difference. The money in your Bank of America account today is a promise or liability from a commercial bank.
Okay.
A CBDC would be a direct liability of the central bank itself. I like to think of it as a government-run Venmo. The balance in that digital wallet would be a direct claim on the government, just like the physical dollar bill in your actual wallet. And this isn't just a theory.
Yeah?
According to the Atlantic Council, a staggering 134 countries representing 98% of the world's GDP are now exploring a CBDC.
Wow.
China has been piloting its digital yuan for years. Nigeria has launched the e-Nigeria, and the Bahamas was one of the first with its sand dollar. Proponents argue CBDCs could lead to cheaper, faster payments and financial inclusion.
Okay.
But the early results are mixed, as Reuters has reported. Both the e-Nigeria and the sand dollar have struggled with extremely low public adoption. It turns out that just because a government builds it doesn't mean people will actually use it. So what's the alternative?
That's where the private sector comes in with the stablecoin.
Exactly. If a CBDC is government-issued digital cash, think of a stablecoin as a digital casino chip issued by a private company.
I like that.
Companies like Circle or Tether create coins. USDC and USDT are the big ones. And for every digital coin they issue, they promise to hold one real US dollar or an equally safe asset like a treasury bill in a highly audited reserve. That one-to-one backing is what keeps its value stable. For a long time, this was a bit of a Wild West.
Yeah.
Now regulators are stepping in. New rules, like the proposed Genius Act in the US, are demanding that these companies prove they have one-to-one reserves and undergo strict audits.
Right.
They're trying to make those private casino chips as reliable as official money. This brings us to the United States.
Okay.
While the world is racing ahead, the US is on a strikingly different and more cautious path. The Federal Reserve is researching a digital dollar, but as Fed Chair Jerome Powell stated very clearly this year, they are, and I quote, nowhere near actually issuing a retail CBDC to the public. So this global debate between the two models really boils down to three critical tensions: trust, privacy, and control. First, trust. With a CBDC, your trust is placed in the government and its stability. With a stablecoin, you're trusting a regulated private company and its auditors.
Right.
It's a huge question. Who do you trust more?
Second, privacy.
This is a massive concern. A CBDC could, in theory, give a government a direct, real-time ledger of every single transaction you make.
Wow.
And finally, control. This might be the most important one. A CBDC could be programmable.
What does that mean?
Imagine the government issuing stimulus funds that automatically expire in 30 days, or that can only be spent on groceries.
Yikes.
It's a powerful policy tool, but it's also a terrifying level of potential control over individual behavior. Stablecoins, by contrast, are generally open and permissionless.
So why does any of this matter to you?
Because the winner of this race, or how these two systems learn to coexist, will define the very architecture of money for the next generation.
Right.
Are we heading toward a future where money is a public utility, directly controlled and monitored by the state?
Or one where it's a service provided by competing private companies, overseen by regulators?
That answer will shape global financial power, international influence, and your personal economic freedom. So whether a CBDC or a stablecoin wins out, or if they both find their place, it matters that we understand what's at stake now.
This is the time to learn and form an opinion. Don't wait until the terms get defined for you.
Now, here's a question we'd like you to think about. If you had to choose today, would you rather hold your digital money in a wallet provided by the government or one from a regulated private company?
The answer isn't simple, and it reveals a lot about what we value.